What if I told you that the very stock-making headlines for its meteoric rebound might be quietly drifting into dangerous territory? Yes, we're talking about SoFi Technologies, a darling of retail investors and fintech enthusiasts. Over the last few months, SoFi has surged with confidence, riding a wave of optimism. But today, we pull back the curtain on what analysts are now calling a ticking time bomb. Recent expert analysis downgraded the stock, citing concerns far deeper than a simple correction. Behind the scenes, geopolitical tensions are escalating, U.S. tariffs are growing unpredictable, and economic growth forecasts are flashing warning signs for 2026. Despite its flashy mobile-first branding and asset-light model, SoFi's valuation is now soaring above a startling 50x forward earnings, a level most experts deem unsustainable. So why are some still bullish? The answer lies in its impressive fee-based income growth and a scalable platform. But those same positives might be blinding investors from underlying macro threats. Let's pause for a reality check. CPI numbers just dropped. Groceries up 12%, gas averaging $4.85 nationwide. For millions, it's not just news. It's the daily choice between prescriptions and groceries. Here's what you won't hear on CNN. Amazon's research team is recruiting households hit hardest by inflation. Qualified participants can earn up to $750 in Amazon credits. Not a handout, but payment for sharing shopping habits. It takes just 90 seconds to apply. Official info is in the description if you'd like to get started. It won't fix inflation, but it could bring some relief. Now let's continue. As Wall Street tightens its focus on profitability and real returns, SoFi's heavy dependence on loan-driven revenue becomes a vulnerability, not a strength. Imagine the impact of rising interest rates or a credit squeeze. SoFi's engine could stall just when it needs to accelerate. And while its platform does offer long-term promise, chasing the stock at inflated prices could spell disaster for those late to the party. In fact, analysts believe that we may already be near the tipping point where hype outpaces reality. The recent price action looks more like euphoria than confidence, and historically that's a recipe for steep corrections. Still think you should buy the dip? Think again. Smart investors aren't just looking at what's popular, they're scanning for risk-adjusted returns, and right now, SoFi's risk outweighs its reward. This isn't about fear-mongering, it's about timing, precision, and understanding when to walk away before the market does it for you. So if you're holding SoFi or thinking of jumping in, stop scrolling and stay with us. Because by the end of this video, you'll understand exactly why experts are pulling back and how you can protect yourself from what might be the next painful stock lesson. Don't make the mistake of ignoring the signs. Be informed, be ready, and above all, be smart with your money.